Again, the primary trend is down. We primarily want to sell on a rally higher, 157 area. That's the area to watch. But we also want to keep a very close eye on these two indicators as the week goes on. Right now, it's a little concerning to me here actually, because you can see the predicted long-term and medium-term differences are clearly pointing up. The short-term is breaking lower again, so we'll see how this one plays out, but definitely a few concerns there. The euro, I really like the shorts on the euro, but not at this level. Sunday night, we're going to get a big push probably to the downside. Probably not a bad idea to buy it down there and then resell higher, much higher, towards this 130, 136.50, 137, somewhere up in that area. Let it retrace. There's going to be an adjustment pre-non-farm payroll. Clearly this thing is grossly oversold. So like I've said so many times before, nothing goes straight up, nothing goes straight down. When it gets down there, I think we're going to level out. Just like last Sunday, we had like a 200 pip move lower on the euro US currency pair, only for it to turn around and give up all those gains and shoot right back up to the 136 level the next day. So be mindful of that. Do not get too aggressive with shorts down at this 133, because I don't think the market's going to support further shorts to start the week. Now, US Swiss franc, this one here, we've got pretty strong support down here around this between 89, and 88. I would look at that level to get back in on there long. I do not like shorts on this currency pair at all. I believe the Swiss National Bank is going to do whatever they can to push this thing up higher, and really Euro Swiss franc is going to determine the direction of US Swiss franc. That's how this one's going to play out, so remember that. Looking at the New Zealand currency, same as the Aussie currency. Now it's come under a little bit more pressure with the credit, the currency downgrade, the credit downgrade, excuse me. I think it's going to level out. I think they're all grossly oversold, and there's just going to be a correction right across the board, either before the non-farm payroll or just after the non-farm payroll. Maybe a little bit of a risk rally. I think the risk rally after non-farm payroll is going to be unlikely. I think we're probably going to see less than 30,000 new jobs. If we see less than 30,000 new jobs, the dollar goes through the roof, and these commodity currencies just basically collapse. So, very important to remember that. Now, again, looking at the US-Canadian pair, I've talked about this extensively, that we're going to play a range, we're going to retrace. We've come back this week down into the 101.20 area, only to be met with strong buying down in the one. I expected a little deeper pullback towards parity. We didn't get it. We got 101.20, and then from there it's just gone straight up. Now we are clearly we are grossly overbought on these. The predicted short, medium, and long-term differences. Dual indicator, they tell us the strength of the trend, but they also tell us when it's overbought or oversold, and when we should be very cautious. When we're up sitting here, the predicted long-term difference is sitting at positive 250. Oof, that's a very overbought signal. So I would not recommend longs up at this level. I would be very cautious. We want to see this thing pull back. Probably the first level is going to be between 102.72 and 104.03. Potential longs, small longs can be entered there, but again, this currency pair is a strange one, because it can actually, if that non-farm payroll number is good and the dollar, this can benefit the Canadian. Canada exports everything to the US, their biggest trading partner. So if things are looking a little bit better on the risk side for the US, then the Canadian dollar could strengthen and drive this thing right back to this line I have drawn here. I don't think we're going to get quite down. We're not going to get anywhere near 97, in my respectful opinion. But a retracement back into the 101.50 area is certainly possible by the end of the week. So just be mindful of that. Dollar yen here, we've got a triple EMA cross that is attempting yet again to break higher. Now we can see the predicted MACD, the predicted TSI. We've got a pretty clean signal here. The medium-term crossover, all three of these indicators are lined up. The predicted short, medium, and long-term difference, they are an absolute perfect position for the dollar yen to break higher. Now, does that mean it will? Not necessarily. From a fundamental basis on the yen, like I've talked about, the yen should be the most worthless currency in the Forex market, when in actual fact it's the strongest next to the dollar right now. But the yen has been strong right across the board for basically the last year or two. So always that, we don't want to get too comfortable with these things. As long as we stay above the 76 level on the dollar yen, then we should be okay. The Bank of Japan is clearly going to try and intervene down there. Whether they're going to be successful or not, well, to be perfectly honest, they haven't been overly successful to date, right? They bump it up towards the 80 level, but then the sellers come right back in. But the reality is, we are at multi-year, we're at the lowest that this currency has ever been. The repatriation of funds going back into Japan after the earthquake should start to flatten out, and we should start seeing this currency pair, we should see the yen start to weaken right across the board, but it's going to remain volatile as long as those equities continue to push lower. As the equities move lower, they have the highest correlation to the Japanese yen, so strong equities, weak yen. Weak equities, strong yen. So be very careful of that. Just be mindful that if you're trading the dollar yen pair, keep a very, very close eye on that S&P 500. So with that said, this is the Forex Weekly Outlook for the week of October the 3rd, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.